Let's turn to you on Nvidia. You write about constraints today and how important that term is for Nvidia.
Yeah, what's great about constraints is it means more's coming later. And in Nvidia's case, they're the only game in town. You can't just plug in an AMD chip because the software won't work, et cetera. So you got to just wait until they can ship it to you. So we like that. That means it's the stock's getting bought on the dips. You can see it. It didn't stay down very long. It's probably flattish or slightly down now. But the reason is that we know more is coming later. That drives sequential growth and margin improvement as we go into the back half of the year. And that's ahead of us. And remember, they're the only semis company not talking down the 1Q. That's a big differentiator in this market. So I think a lot of people are going to be buying it on the dip.
What'd you make of his pushback on scaling walls, so to speak?
Well, we wrote about that, too, earlier in the week, and we think that is just something we'll work through. I was really impressed. There's a podcast with Dario Amodei of Anthropic, and he kind of explains the synthetic data trend and how machines are going to create data and then create data from scratch, and that will help feed these machines and keep them going. Usually, in my experience, and I'm no PhD in AI, chip, scaling, but from what I can see, the industry will work their way out of this.
You're not concerned then? Because I want to make sure our viewers understand. It's this concern we raised a couple of weeks ago.
Yep.
Mark Andreessen was sort of at the forefront of it, the idea that you're not getting anywhere near the increases in terms of productivity from the latest models versus the last model. You're not a buyer of that in terms of believing that this is not, that there's a wall here that's being hit.
I think you have the smartest people in the world working on this problem, and they're going to find their way through it, and they're finding their way through things. There was other bottlenecks a few months ago. These are really smart folks that are working their way through things. But I think the positive surprise here is data is the new gold, is the new oil, and it's really coming into its own. We are creating data with AI. We're creating synthetic data. We're creating data from scratch, and these guys are figuring out how to feed that into models. Also, you have Elon Musk taking more and more video, revolutionizing self-driving. I think they've made a lot of advances through video, and Jim's talked a lot about that, but that's really just taken hold. I think we'll find our way through this.
And the data center is the new manufacturing hub, so to speak, for AI, as Jensen said during the conference call.
Yep.
Let's get back to Nvidia. Just from your projections, I mean, what are your anticipations in terms of next year's revenues, the growth rate, and therefore back into a multiple for me as to why you have where your price target is?
Next year, I have revenues growing 50%, and I think that's conservative. And then the next year, I'm at 22%. Who knows if that 22 sounds pretty light considering Jensen's track record. Our target is only 35 times our 27 estimate, which is really calendar 26. So it's a PE to growth that's still very appetizing right now for this stock. Of course, on any given day, the stock can go down. But I think given the growth that's out there for this company, and given it's a systems company, sort of like Apple is for the consumer, that's what this is for the enterprise. It's going to be bigger than people think still, with more profits as a percent of the total industry than people think still, and last longer. Just, from my experience, the vertically integrated companies that do it all, that tend to hit it right, tend to go on longer than people think.
I'm interested when you're talking about your revenue projections at 50% and then at 22%, and how Nvidia executives are sort of walking this walk carefully, talking about growth, but you're probably not going to see 50% forever and still keep people excited. I mean, can they walk this carefully?
Well, what needs to happen at some point here is this is a cash gusher, too. And Nvidia wants to go, we're a growth company. But at some point, they have to buy back more stock because there's simply nothing they can do with it. The government probably can't let them buy anybody even close to, $1 trillion, of course. So they're going to have to do tuck-in acquisitions, and they're going to have to give stock back. I think they are going to go through, just like Apple did, that metamorphosis of more mature, hey, we have more recurring revenue. That's why they're building a software business. That's why they're going to continue to do that. And I think that they realize that. But right now, they're in growth mode, and it's go, go, go. But I think, let's put some trust in Jensen and Colette that they know they have to build up those recurring revenue streams and return more cash to shareholders when appropriate. And those days are coming, and we'll see how they do. But I have confidence that this is a systems company, which makes it a little different than just a chip company who's running and gunning like some of their peers.
Right.
You even wrote, you compared it to iPhone 6 era for Apple, which I'm trying to think, is that about the time services got taken seriously over there?
Well, you know, iPhone 6 was this huge, big screen transition, and then Luca Maestri, along with Tim, then the CFO, really did a great job of saying, hey guys, this base we just built is going to have all this recurring revenue. You know, here's what it is, more disclosures around it, more. Now, they're not ready yet in Nvidia, but they said last night that $2 billion in software revenue as we exit the year. Within a year or two, that number is going to be way more significant, way more tracked. But also, there's DGX Cloud. There's other things they're driving. They're driving NIMs. They're enabling the market. And these kind of things are going to get more important as we go throughout. And I think a lot of companies, especially enterprises, are not going to be able to live without these products as they adopt AI.
Ben, fascinating stuff. Thank you for walking us through the focal point of the week, and Mike putting it in perspective with the broader markets.
Hey, thanks, guys.
Appreciate
Great to be
much.
here.